Just like you, I'm trying to figure out if the news about these banks collapsing is a bigger problem than what's actually being stated in the news. If you look at the news right now, the latest bank to suffer is First Republic Bank. If you don't know about First Republic Bank is a regional bank that mostly caters to wealthy individuals. Now, this is following along what happened with SVB and Signature Bank earlier in the week. Hi, I'm Nadia, one half of the Wealth Twins, and I want to know if this banking crisis is actually a crisis or is it something that only affects certain banks and certain individuals. So let's jump into it. From what I can tell, the only thing that's similar to all these banks is that they cater to very wealthy individuals and they have a high amount of uninsured deposits. To qualify as an uninsured deposit, you have to have over $250,000 in your bank account. The FDIC insures $250,000 and below. So for most Americans, you don't have to worry about being uninsured when it comes to having your money in the bank. If you have over $250,000 in your bank account, the government says they will not insure that money, so you're at risk of losing that money if you keep it in the bank account. Over the last few days, First Republic has suffered from a lot of depositors taking their money out of their bank and moving it into different accounts. So if you look at it, you'll see that a lot of depositors are taking the money out of their bank accounts, over $250,000, and moving them into higher paying money market accounts. Now this makes sense because that money is uninsured. So they would rather move them into accounts that are still relatively safe and at the same time get paid higher interest on that money. In case you didn't know, banks need the cash on hand that they have from the depositors in order to run their businesses. When depositors take their money out of the bank, that forces the bank to be able to cover that money and then make sure they have money to continue doing their operations. When depositors take their money out of the bank, a bank has to go borrow that money somewhere else. Banks go to either the Fed window or to a new program called the Bank Term Fund. First Republic has been borrowing a lot from the Fed window. When a bank goes to the Fed window, it gives a signal that something's going on with that bank and it's usually not good. First Republic also has borrowed a lot of money from the Federal Home Loan Bank too. In just over the course of a few days, First Republic has had to borrow billions of dollars from the Fed window and from the Federal Home Loan Banks. Their stock price has also declined dramatically and they had to cut their dividend. Each of these actions did not install any confidence in investors and in the public in First Republic Bank. Just this week, in order to try to restore confidence in First Republic, 11 of the largest banks came together and said that they would give $30 billion to help First Republic shore up its business. That news was supposed to increase the confidence in the bank, but it did not help. The stock price still slid today. No bank will be able to handle a rush of customers taking their money out at the same time. It doesn't matter if it's a regional bank or one of the larger banks. It's not designed that way. These banks are secure. It's just that depositors are getting scared and moving their money out of these banks. These banks need cash in order to run their operations. You can take your money out when you want to, but if everyone tries to take their money out at the same time, any bank will have a problem handling those kinds of transactions. Depositors will continue to pull their money out of these banks, and these regional banks will not be able to sustain their businesses. These regional banks will be swallowed up by the bigger banks that are already too big to fail, and then will create a vicious cycle. If the fear in the banking market doesn't die down, it will be a lot harder for individuals in the public to be able to get a loan or get a mortgage from these banks. Banks will be stricter with their requirements for anyone looking to get a loan or a mortgage because they want to make sure any loans they have on their balance sheets have a high likelihood of getting paid back. So if you're a person looking to borrow money from the bank, it's going to be a lot harder coming up if this fear doesn't die down. Larger banks are susceptible to the same crisis that First Republic is going through right now. If customers continue to make a run on the banks, it will be a disaster. One of the factors that the larger banks have in their favor is that their customer base is much more diverse. They don't only focus on high net worth individuals. In my opinion, what needs to happen is that the government needs to let people know that your deposits are safe in your bank. There's no reason for you to go run out and take your money out of the bank deposits, especially if you have under $250,000. Now, in my personal opinion, you shouldn't keep too much in the bank because If you don't need that money within 1 or 2 years, there's other places you can park that money, but you should have money in your bank accounts to cover emergency funds and any large purchases you want to make under 1 or 2 years. Having more than $250,000 in a bank account only affects a small amount of individuals. I find it very interesting that each of these banks are getting singled out each day leading up to the Fed meeting, when we find out if they're going to increase interest rates or not. If they increase the interest rates, it will still help to fight inflation. But if they don't, it may signal that there's a bigger problem in the banking system than we don't know about. My fear is that currently we're not in a recession, but if these fears continue, we can bring ourselves into a recession when there was no need other than a lack of confidence in the market and in banks. So if you're looking at all this banking news and you're getting worried, please make sure the information actually impacts you. Don't just go pulling your money out of these regional banks, because you'll be left with less banks that will actually cause more of an issue for the economy. If you still have confidence in U.S. banks, which you should, but you're looking for a bank that pays a high interest rate on your deposit, check out this video here, where I give you a list of 5 banks that pay a high interest rate on their savings accounts. Since these are fast-moving news stories, more and more information is coming out. As we find out more, we'll try to share what we learned with you so you can try to make sense of it too. I hope you found value in this video, and please remember to subscribe to the channel because we would love to have you as part of our community.